Money you pull from a reverse mortgage is not taxed as income, not a dollar of it. And yet, almost every week, someone in their 60s or 70s asks me if that Mortgage Forgiveness Debt Relief Act they keep hearing about means that they're going to owe a giant tax bill on it. Two completely separate things, and mixing them up scares good people out of a decision that could let them stay in the home that they plan to grow old in. So take a second and hit the subscribe button so we can continue to bring valuable information to you. We greatly appreciate it. Now, let me untangle this slowly. Because if you are on a fixed income, one wrong assumption about taxes can freeze you in place for years. Here's where that confusion starts. Both of these things have the word mortgage in them. Both touch taxes. So the brain files them in the same drawer, but they don't belong in the same drawer. Let me take the first one. Mortgage Forgiveness Debt Relief Act. In plain English, this rule is about what happens when a lender cancels or forgives part of what you owe on a home loan. Say a homeowner owes more than a house is worth and the bank agrees to wipe out some of that balance. Normally, the IRS treats forgiven debt like income. You didn't pay it back, so on paper, it looks like you came out ahead and they can tax you on that. This act was written so that in certain qualifying situations, that forgiven mortgage debt doesn't get counted as taxable income. Notice the whole thing hangs on one word, forgiven. This is a rule for people who had debt erased, a short sale, a loan modification where the bank knocked down the balance. That is the world that this act lives in. Now, here's the part where people slam the brakes for no reason. A reverse mortgage is not forgiven debt. It's the opposite. You are not having a balance erased. You are borrowing against the value of a home you already own. The money you receive is a loan advanced. It's money you are borrowing, plain and simple, and borrowed money has never been income. When you take out a car loan, nobody taxes you on it. Same idea here. So the money from a reverse mortgage is generally not taxable because it was never income to begin with. It's your own equity handed back to you in cash, and it doesn't touch your Social Security check. It does not by itself count as income for those calculations. That's a huge relief for someone living on a fixed income check every single month. So the real question becomes this: why do these two ideas keep getting welded together? Because both live under one word, mortgage, and because retirement makes people cautious about anything with the word tax attached. It's smart. Being cautious is smart, but caution built on a mixed up fact just keeps you stuck. Let me stay on the reverse mortgage side a bit longer. That's the part that actually matters for the person watching this. Picture a homeowner who owns her place free and clear. The house is paid off, but the insurance renewal doubled and the HOA dropped a special assessment for the roof owner. Monthly bills are eating the bulk of her Social Security income. She hears there is a way to erase her monthly mortgage payment and pull some cash out, and her very first thought is, wait, am I going to get taxed on that money? So she does nothing. She keeps skipping the air conditioning the month the insurance is due. She froze over a tax rule that doesn't even apply to her. Here's what I want you to hold on to. The forgiveness rule is about debt someone erased. The reverse mortgage is about equity you are borrowing against. One is a cancellation, the other is a loan, and they do not overlap. Now, I'm careful here, and you should be too. I'm a mortgage professional, not a tax advisor. How any tax rule lands on your specific return depends on your full picture. Your other income, your filing situations, whether any part of your Social Security income is already taxable. That is exactly why one of the pieces of my whole picture reverse method is sitting down and mapping out your whole situation before anyone recommends a single thing and confirming the tax side with a qualified tax professional who looks at your actual numbers. Never guess on this. Never take a stranger's word for it. Get it checked against your own return. Because here's what is really at stake. It was never about the tax on the money. That was a mix-up. The real question underneath it is whether you can stay in your home without draining what little you have left, and you cannot answer that with a rule you heard on television. You answer it by putting your bills down next to you, side by side, against your income, and seeing the actual gap on paper. That is the moment things get clear for people, not a brochure, their own numbers. So if you have been sitting on this, half worried about a tax bill that probably does not even apply to your situation, let us take the guesswork off your plate. Book a free discovery call with us. The link is right below the video. We look at your whole picture. We will loop in the right tax professional for your specific return. And if a reverse mortgage is not the right fit for you, we will tell you straight. No pressure, no fees to talk. Bring your kids in on the call if you want another set of eyes. I want you to feel sure, not sold. If this cleared something up for you, subscribe so the next thing you have been quietly worried about gets answered too. We go through these one at a time in plain English so you can decide for yourself.